Yeah, for Ameritrade, it's hi Melissa. For Ameritrade, it's about 25% of total revenues is commissions. But as Dominic pointed out, not all commission revenue is being impacted. The options, the per contract fee isn't being impacted. We think about 60 to 65% of that commission revenue, of the 25%, it will be impacted if they decide to meet Schwab's pricing.
60% of the revenue if they meet Schwab. So if they meet Schwab's pricing, Rich, that's zero. So 60% of that 25% of revenues goes to zero?
It could. Now, you got to understand there are offsets. There's, as Dominic pointed out, there's payment for order flow. They make money on margin loans. They make money on interest. They're a lot like a bank, and they are banks these days. And they're making money from mutual funds, et cetera, and advisor fees as well.
How sticky are traders on or customers on a TD Ameritrade, for instance? In other words, do they have a lot of other services that they purchase or participate in on that platform, or do many of them simply trade stocks, trade ETFs and options?
Well, first is a good question, Melissa. They are sticky to the platforms. These platforms, are almost like cockpits to the active traders. So they get used to that, and they are normally sticky. The e-brokers don't want to give up or don't want to lose any customers because they do get other revenues besides just trading. Now, just that if Schwab's commission revenues are only 7% of their revenue, they're getting a lot of revenues from these other sources that, I've explained and Dominic's explained. E-Trade is about 16%, and then again, Ameritrade is 25%. Commission revenue as a percentage of total. Now, again, like I point out, not 100% of that commission revenue will be impacted, but, more than half is what we estimate.
Will customers leave other companies and go to Schwab or Interactive Brokers for these deals, or will they continue being happy with their Merrill Lynch guy or their UBS guy or whomever it happens to be?
Well, I think that's a good point, Tyler. If you're moving from a big bank that's charging you commissions, they may well move to the Ameritrades, and if they come down to zero, or the Schwabs. But amongst the e-brokers, they don't want to. We'd expect that they're going to meet the pricing or in some fashion move in that direction. The other big thing that I think is behind Schwab's movement today is that you've seen a whole growth of a zero commission industry in the millennial generation with firms like Robinhood. These are young investors. They don't spend a lot of time. They don't trade a lot, but they are going to this zero commission. Robinhood is probably the fastest online broker. Now, not the most profitable or generating the most revenue, but they certainly have brought on a lot of accounts. Schwab doesn't want to be behind that momentum and wants to catch up and have a somewhat of a similar offering as well.
Rich, it's Dom here. One of the things that we are not talking as much about is the multitude of registered investment advisors, RIAs, who now have business with Schwab or with TD Ameritrade or with Fidelity. This is a big deal because then it changes the calculus for how RIAs or registered investment advisors go to their business with Schwab or TD Ameritrade or Fidelity, right? That's a huge deal.
Yeah, that's an important business to Schwab. They have the most advisors. But this free trading and the trade, the lower commissions will be passed on to them as well. So that's why Schwab can do some of this, is because they get so much of that ancillary revenue that isn't trading, from advisors. They'll certainly look at that channel and hope to grow assets, which advisors bring in, and which is really the benefit advisors is bringing in assets. They'll try to make money from the assets rather than just trading, which, as we have a trade, a commission war or a trade war in trading as well as, abroad.